Hi guys, my name is Aurora and I'm a part of the Forex Strategies Resources team. In this video, I will show you how to trade with pivot point levels. Using pivot point as a trading strategy has been around for a long time and was originally used by flow traders. This was a nice simple way for flow traders to have some idea of where the market was heading during the course of the day with only a few simple calculations. The pivot point is the level at which the market direction changes for the day. Using some simple arithmetic and the previous day high, low and close, a series of points are derived. These points can be critical, support and resistance levels. The pivot level, support and resistance levels calculated from that are collectively known as pivot levels. Every day, the market you are following has an open, high, low, and a close for the day. Some markets like Forex are 24 hours, but generally use 5 p.m. East as the open and the close. This information basically contains all the data you need to use pivot points. The reason pivot points are so popular is that they are predictive as opposite to lagging. You use the information of the previous day to calculate potential turning points for the day you are about to trade, present day. Calculate your pivot points online. I leave you the link in the description below. If you would rather work the pivot points out by yourself, the formula I use is the following. As you can see from the formula, just by having the previous day's high, low and close, you eventually finish up with 7 points, 3 resistance levels, 3 support levels, and the actual pivot point. If the market opens above the pivot point, then the bias for the day is long trades. If the market opens below the pivot point, then the bias for the day is for short trades. The three most important pivot points are R1, S1, and the aqua pivot point. The general idea behind the trading pivot points is to look for a reversal or break of R1 or S1. By the time the market reaches R2, R3 or S2, S3, the market will already be overbought or oversold, and these levels should be used for exits rather than entries. A perfect set would be for the market to open above the pivot level and then stall slightly at R1, then go on to R2. You would enter on a break of R1 with a target of R2, and if the market was really strong, close half at R2 and target R3 with the remainder of your position. Example. Unfortunately, life is not that simple and we have to deal with each trading day the best way we can. I have picked a day at random and what follows are some ideas on how you could have traded the day using pivot points. See the following table. Have a look at this 5-minute chart. The green line is the pivot point. The blue lines are resistance levels R1, R2 and R3. The red lines are support levels S1, S2 and S3. There are lots of ways to trade this day using pivot points, but I shall walk you through a few of them and discuss why some are good in certain situations and why some are bad. First, the breakout trade. At the beginning of the day, we were below the pivot point, so our bias is for short trades. a channel formed. So you would be looking for a break out the channel, preferably to the downside. In this type of trade, you would have your sell entry order just below the lower channel line with a stop order just above the upper channel line and a target of S1. The problem on this day was that S1 was very close to the breakout level and there was just not enough pips in the trade, 13 pips. This is a good entry technique for you. Just because it was not suitable this day does not mean it will not suitable the next day. The pullback trade. This is one of my favorite setup. The market passes through S1 and then pulls back. An entry order is placed below support, which in this case was the most recent low before the pullback. A stop is placed above the pullback, the most recent high peak, and a target set for S2. The problem, again, on this day was that the target of S2 was too close and the market never took on the previous support, which tells us that the market sentiment is beginning to change. Breakout of resistance support. As the day progressed, the market started heading back up to S1 and formed a channel congestion area. This is another good setup for a trade. An entry order placed just above the upper channel line with a stop just below the lower channel line and the first target would be the pivot line. If you were trading more than one position, then you would close out half your position as the market approaches the pivot line. Tighten your stop and then watch market action at the level. As it happened, the market never stopped and your second target then became R1. This was also easily achieved and I would have closed out the rest of the position at the level. Advance with MACD. As I mentioned earlier, there are lots of ways to trade with pivot points. A more advanced method is to use the cross of two moving averages as a confirmation of a breakout. You can even use combinations of indicators to help you make a decision. It might be the cross of two averages and also MACD must be in buy mode. Mess around with a few of your favorite indicators, but remember the signal is a break of a level and the indicators are just confirmation. Other examples. In this 5-minute chart AUD-USD, we have one breakout and two pullback. In this 5-minute chart AUD-USD, we have one breakout and two pullback. Strategy pivot point levels with Guppy. It is a very speculative day trading strategy and therefore potentially very profitable. In other words, it is like a grid trend following. The strategy is based on pivot point levels and the guppies of moving averages. Trades must always be taken in the direction of the trend starting from the pivot levels. Buy. Candle price above R1 breakout and above Guppy candle price above R2 breakout and above Guppy. Sell. Candle price below S1 breakout and below Guppy candle price below S2 breakout and below Guppy. Reversal sell. Candle price below R3 breakout and below Guppy candle price below R2 breakout and below Guppy. Reversal buy. Candle price above S3 breakout and above Guppy. Candle price above R2 breakout and above Guppy. Profit target the next level. Stop loss the previous level. Examples of trades. In the GBP-JPY, I have 4 buy trend trades, one reversal sell trade and one sell trend trade, all in profit. GBP CAD, I have 6 buy trend trades, all in profit. EUR GBP, I have 1 buy trend trade and 4 sell trend trades, all in profit. This strategy is suitable for volatile currency pairs and is a strategy that earns a lot of pips. It is like a pips multiplier. So, if some bad days appear, don't worry, because on good days you can earn 200 to 300 pips. Conclusion. The use of pivots is a very popular technique used by day trading because it is flexible in management and easy to follow. Furthermore, money management can be easily managed with the pivot point levels technique. This is a very important aspect. Subscribe, like, comment and share on this video.